Hello everyone, good afternoon. Thanks for joining us. I know you probably all had lunch and you're ready to go to sleep, but this is going to be an absolutely fascinating panel on the rise of leveraged and listed investment products, what that means for the asset class, how institutions are getting involved, and where products such as Bitcoin futures and some of these new ETFs will play a role in getting institutions on board. I'll very quickly introduce our panel to you. We have Bradley Duke here, the CEO of ETC Group, Payal Shah, the Director of Equity and Cryptocurrency Products at CME Group, followed by Daniel Masters, Chairman of CoinShares, and Shaun Fernando at the end, Chief Risk Officer and Head of Product Strategy at Deribit. Now, I just want to kick off with sort of a broad markets question at this point and just get your views on this. We've got a bit of volatility in the markets right now, both in equities and, of course, cryptos. Rate hikes on the way, the Russia-Ukraine war continuing as well to weigh on markets. But one of the interesting things is Bitcoin has outperformed gold sort of in this period. So what are institutional investors saying at the moment towards cryptocurrency products and digital assets in this time of uncertainty? Bradley, I'll kick off with you. What are you seeing?
Well, I think first of all, the institutional investor today is, there's a lot of talk about institutional adoption of cryptocurrency, and I think it's still very much in its infancy. I think there's a long way still to go. But the ones that are interested and are looking at these markets are mostly focused on the biggest ones, and really Bitcoin and ETH. But there's definitely the scarcity narrative for Bitcoin is an interesting one, and it's been quite a turnaround where you're seeing from being a sort of a kind of a fringe investment strategy, crypto or Bitcoin in particular, it's now being seen increasingly as a safe haven asset, and people are turning to it in times of uncertainty, like what we're seeing at the moment, as an alternative asset, or to put part of a small part of a portfolio into Bitcoin as a safe haven asset.
Payal, is that the same sort of comments you're getting as well? Because for a very long time, there has been this narrative, Bitcoin as this form of digital gold, but actually what we have seen is effectively just track the NASDAQ and fall when risk assets fall. Is that narrative changing now for the institution?
Yeah, so I think what we're seeing is as investors get more comfortable with the asset class, as they get used to the volatility, as they get used to some of those returns that they're seeing, adoption is definitely coming, probably in Bitcoin and Ether to begin with, because there is some kind of regulatory certainty around that. And that's really what led us to the introduction of Bitcoin futures and options, Bitcoin and Ether. The introduction of futures has allowed, through potentially shorting the market, using futures to short, we're seeing maybe a reduction in some of that volatility that was there 3 years back. And also, the introduction of different personas to the market. So we're now, with that volatility, we're seeing different use cases or users access the market. So you might see a miner getting involved with listed products to manage that risk. We may see institutional clients getting involved. Banks, for certain, we're seeing within our asset futures and options, we're seeing bank adoption increasing year on year. So it's definitely a mix, and I think as people are getting more used to the asset class and using crypto as a diversification tool, that pool is definitely broadening for us.
And for you, Danny, I mean, what are the institutions saying in this time of volatility to you? And also, are some of these products we're seeing in the market only being sort of adopted by institutions, or are you seeing any retail investors get involved at this point?
Well, I think in Europe, the numbers look, I think about $7 or $8 billion have flown into ETP type products in this arena. Our forecast is that'll get to about 16 to 20 by 2025 by our metrics. But then that's all dwarfed by what's going on in the United States, largely through Grayscale. And so certainly I'd say in the European arena, the adoption is still very, very early stage. We are having a lot of very active conversations. And I think that's coming. Now, to me, in terms of your question about the market structure at the moment, and if we just wind the clock back to the beginning, Bitcoin emerged as the antidote to the 2008 quantitative easing spike. And A friend of ours at CoinShares, Kevin Walsh, who's a former Federal Reserve board member, said that he felt that Bitcoin was created, in that vein as a response to this sort of monetary easing, and that the future of Bitcoin will be determined on how we unwound that quantitative easing program. Well, that QE program was in the region of $4 trillion worldwide, and then we didn't do anything with it until 2020, and then we had COVID, and we boosted that from 4 trillion to 12 trillion. And this is a very blunt instrument. So where we sit today, and what I think is going to be an increasingly important narrative in the future, is the Federal Reserve and the other central banks around the world are kind of out of tools now, and they're faced with an unprecedented negative real interest rate environment and a cost of living increase, which I don't think populations have really grappled with yet. And I fear this in just a sort of macro sense, that there will be a loss of confidence in the fiduciary and financial management of the system. And I think that's going to speak very powerfully to Bitcoin. And I think in terms of people, and your other question, who rightly point out that Bitcoin has been washed out with a lot of other risk assets, I would say that as we move into this severe inflationary environment, it's still very, very early days to determine whether Bitcoin, in its first rodeo in the inflationary world, will actually perform or not. And I think we're about to see some great performance.
Yeah, it will be a fascinating watch there for sure. Shaun, as you look at it, of course, from a risk perspective, of course, a lot of these institutions could be quite risk averse. They're a bit worried perhaps about whether they should be getting involved in these crypto products, particularly as there is in many jurisdictions a lot of regulatory uncertainty at this point as well. So just give us your sense about some of the conversations you're having on that side.
Yeah, I think, well, from a risk perspective, if institutions are worried about volatility, then it's just a case of choosing what kind of size that they're going to go for. They just have a similar, we, for example, and I think most exchanges have a very similar outlook on risk. You look at a percentage move, and based on those percentage moves, you're going to say, okay, this is how much margin you need to deposit. But also as a firm, they're looking, okay, for a single stock, or for, let's say, an index product, and a traditional index future, they'll look at something like up to a 5% move. Whereas we're looking at, or the institutions as well will be looking at 20%, 30% moves for Bitcoin and scaling down volumes based on that. From a regulatory perspective, I think there's a lot, it's like constantly changing, and I don't think the regulators know yet exactly what they want and how they want to tackle it. I think what we're seeing now is that this self-regulatory approach that is happening, or that has happened throughout the years, has got rid of a lot of kind of scam exchanges, and the ones that are really true, like trying to be really transparent, trying to be really fair, will kind of prevail.
I know a lot of you guys here are obviously thinking also about what comes next, what the future looks like. Hoping you guys can help me answer that. Just a quick show of hands before I do get onto that. Who has heard of CME's Bitcoin and crypto futures? Okay, good. We're at a very good starting point. So I can move forward a bit, Payal, because I want to ask you, where then does the innovation come from? I know recently, just a few days ago, you launched the micro futures. So just run us through that and actually where you see the next sort of innovation coming through in products aimed at institutional investors.
Yeah, so as you rightly pointed out, we launched options on micro Bitcoin and micro Ether on Monday. We're off to a really good start. The screens are lit. We've had some really good trades. And so just to unpack that a little bit, the micro Bitcoin contract we launched in May last year. And already we've done close to 5 million contracts in that micro Bitcoin size. And that is 1/10 of one Bitcoin. So we're really targeting both the institutional market, but also the active trader or the client that wants more precision. Similarly with Ether, the micro ETH contract launched in December last year, and already we've done over 1.2 million contracts there. So fast forward into this year, we launched options on both products on Monday, and really it was two things. It was clearly customer driven, and it was tying two things together: the need and the want for a micro-sized option contract, and with different expiries. So we have created the contract with Monday, Wednesday, Friday expiries, the front 2 months as well. So that really ties into what people are trading on some of the unregulated platforms, what people are trading on overseas platforms. So tying in that risk transfer. And in terms of the innovation, last year we launched 4 crypto products. In the first quarter of 2020, we've come out with options. So in the 4 years, just over 4 years since we launched our initial futures contract, so the standard Bitcoin future with the 5-time multiplier, very institutional. We've seen that contract grow from, I think it was doing 1,000 contracts a day to now 10,000. And that growth is, it's mind-boggling by any standard. So, what in the future we want to build on that, and that really comes from developing the Bitcoin and Ether space, that innovation through futures, options, other ways to trade, but really being that central place for price discovery, managing risk, and the opportunities for speculation as our clients want.
Bradley, maybe you can talk to this, because things like futures and options, these are traditional finance products,
right,
basically wrapping around a new asset class. So, and that's kind of the way, we see it. So, is there something newer than that comes along? Is there something a little bit more disruptive? Because, if you want to trade some crypto, you go onto exchange, you buy it, it's 24 hours. Sometimes you get some mad market moves on the weekend.
Right.
You can't necessarily offload some of your positions that are listed on traditional exchanges, etc., in that way. So what, where does sort of companies like yours aimed at institutions then come out with newer products that can compete with perhaps some of these exchanges and other DeFi products that might come to pass?
Right. Well, I think I'd like to start by saying that that even though our products are institutional, grade in terms of their design, they are, retail investors can invest in them across Europe, outside of the UK, of course. And really, the advantages of an ETP and that what we've got in Europe is a way. It's important that a product that offers exposure to an underlying, like let's say Bitcoin, it actually tracks the underlying first and foremost really accurately. Okay. You have all the advantages of trading on a regulated exchange rather than trading on, a sometimes thinly regulated exchange or unregulated. And also, you've got all the checks and balances that come with many years of regulation, against market abuse. And also the benefits, and I think this is an important point to make, of having to, for the retail investor, for example, having to trade through a regulated broker, where they can give advice on the suitability of the trade, and that falls away when it's an unregulated asset. And of course, then you don't have to have all the stress of being your own bank. You buy an ETP, it goes into your whether you're an institution or a retail investor, it goes into your brokerage account. You don't have to worry about private and public key encryption and the whole stress about hot storage versus cold storage, managing your own wallets, losing your key, all this kind of stuff. So these are the main advantages of that. For the institutions, though, I think they're looking more. They want to see liquidity. They want to see depth of book. They want to see tight spreads, and that's why we're super proud at ETC Group of BTCE's performance. Last year it was the most heavily traded ETP, or any product on the ETF board on Deutsche Börse. That's ahead of the iShares, DAX, MSCI World, and all the other iShares products that are on there. And that shows, one, that there really is an interest in these kind of products, and it really is a vote for the future of Bitcoin and similar cryptos.
Danny, there's a lot of excitement around some of these other altcoins, beyond Bitcoin and Ether. If we look at Solana and Cardano, all these other ones, do you think that products around these are close to coming to the market?
Well, yeah. I mean, I'm at CoinShares and across the spectrum of our peers and competitors in the industry, there have already been a number of altcoins launched, and we're certainly trying to bring a next-gen type of product to the marketplace, and that involves, as with a lot of these protocols, sharing the staking rewards with the clients. That's not easy to do given the structure of these special purpose vehicles that underlie some of these instruments, but we're certainly bringing that kind of product to market now. In a general sense, I think what we all do here on this stage can be categorized as intermediation, and I think as we go forward and as the universe of crypto products and crypto activity continues to expand, that intermediation will eventually fall away. Now, what we're trying to do is keep up with the latest products so that we can give access to those. But if we look all the way back to our original Bitcoin product in 2015 or even 2012 when we did it in a fund format, the sun is kind of setting, I think, on that kind of product because the industry is moving so far forward. And so what we want to do, idealistically, going forward, is use some of the other tools that we have. We bought a company called Napoleon in France, which is an overlay, sort of an algorithmic trading overlay onto exchanges that can be held by individuals. We've gotten involved with Flowbank in Switzerland, where we've taken a big position in that. And we want to find ways to bring what I describe as these new business models made possible only by crypto, whether that's DeFi, NFTs, play to earn, publishing you've seen as well, and find ways to bring those kind of products and newer products to marketplace. We've already succeeded in a limited sense with our blockchain ETF that we joint ventured with Invesco, and that's got a pretty wide remit to invest not just directly into crypto companies, but into companies that will benefit from Web3 technology and exploit it themselves.
Well, just a very quick one on that. Is CME working on anything to do with any of these other altcoins in terms of futures and new products?
It's something that, we're looking at it, and it's the number of client requests and for anything outside the top two, so Solana, Cardano. The challenges that we face are probably twofold, right? So our futures contracts settle to an index. Mm-hmm. And the reason that they settle to the index is, that convergence to an index. The index for the Bitcoin futures and Ether futures is, the way that we've structured it is to use a number of constituent exchanges. So we have 5 exchanges that provide the price. And the reason really is that if there is any outage on any one, we still have a very precise price that we can settle our futures to. So in terms of the other coins outside Bitcoin and Ether, we need firstly an index, or we need the ability to create an index. And then the other point is, really where regulation comes in, that we need to know where to send the paperwork, right? Do we send it to the CFTC? Do we send it to the SEC? So, to have some of that regulatory certainty about who's putting their arms around that. But it's certainly something our clients are asking for. And I think, through the pace of innovation that we've seen over 2021, the speed at which we are bringing new contracts to the market, I think that will certainly continue over 22 and 23. But it's making sure that whatever we bring to the market is right for our customers, right for the market, and it doesn't damage what is already out there. I think that's key.
Right, we've got a very short time left, but I did want to get to a topic close to all your hearts, regulation. You mentioned it there, Payal. Shaun, I'll kick off with you. I mean, how much of a tailwind right now for the industry globally is just regulatory uncertainty, a headwind even, is regulatory uncertainty at this point because it's fragmented, different jurisdictions doing different things. So, I mean, as a business, how do you navigate that? And as an investor, how do you navigate that?
Yeah, I mean, as a business, so I would say there's kind of 2 categories of exchanges, a crypto specialist exchange and a traditional exchange that is now in crypto. And the crypto specialist exchanges are trying to find this kind of ecosystem to make themselves very well self-regulated until the regulators provide a kind of very clear way forward for them. I mean, for Deribit, for example, we just want to be on a level playing field with all the other crypto specialist exchanges. If we do something that is out of step at this early moment in crypto adoption, then we will just lose a lot of market share. And what you're seeing is a lot of KYC tools, like we use Jumio, you've got chain analysis, you've got all this kind of market surveillance tools that all the crypto specialist exchanges are starting to adopt and kind of make the leap into that fully regulated kind of space much smaller. But it's also a question, will the regulators kind of evolve their thinking and understand these kind of different kind of tools, these different companies that have kind of been created and are part of this ecosystem, and they're a method that will make regulation or make it safer for the client. In the end, the client should be number one. It should be like, hey, you're trying to protect the client from themselves, especially if they don't know what they're doing. Like, you want to make it very responsible from a margin perspective, safety of funds, and there's a lot of different kind of metrics. You want to make sure, obviously, KYC, AML, you're not allowing somebody from a sanction list to trade. All this kind of stuff is what the crypto specialist exchanges are doing in a very different way than the traditional.
So just as we want to bring this to a close on just one final question for you all, and hopefully if there's anyone from the FCA or any other regulator here, you can speak directly to them right now. If you had one wish for the regulators at this point, what would it be? And Shaun, I'll kick off with you. If you had one wish, yeah.
But, I think it's to speak with a lot more of the crypto specialist exchanges to kind of understand their concerns, and to try and make it more of a very open dialogue, transparency on both sides. I think regulators sometimes hold their cards close to their chest because they're worried about giving some information that might change in this very rapidly evolving landscape. So just open dialogue, more communication.
Danny?
I was frightened you were going to ask me that. So for those of you who don't know me, if you were to use a J.K. Rowling analogy, and if the FCA was Hogwarts, I'd be Count Voldemort. There are very varying degrees of approach to regulation. And we work in multi-jurisdictions. I love the setup in Switzerland. It's proactive. They support the industry. They mandate the banks to support the industry. The Swiss Federation Council created a really comprehensive document on how to map crypto activity to real-world activity in terms of ownership, disclosure, which a lot of other regulators should follow. In the United States, you have a complex picture because of the dual agency or quadruple agency, depending on how you want to look at it. But I would say in the United States, there is still a pretty strong willingness to engage. And then, in Europe, obviously MiCA's been a big topic in the last week or two. I hope everyone's written to their European MPs about these de minimis wallet sizes and so on. A very, very fragmented approach. What do I want from them? I want people at the regulators to be open-minded to the crypto movement and not try and put crypto into the same bucket as everything came before, because that's pointless for everybody. And there are great benefits to be had. Digitization of assets will bring tremendous benefits. So that's what we're in it for. And what we need to do is create something better and not replicate what we have before.
Payal?
Yeah, I mean, for us, the CME is regulated by the CFTC. And as Danny mentioned, we have open dialogue. They're very engaging. For us, regulation, we certainly see it we certainly see regulation as a pro, right? As long as that regulation it doesn't stifle innovation, we're happy to act within the regulation. And for us, it's brought new clients, new customers into the crypto space because it is regulated. And that's probably the biggest feature of the CME markets, that because of that regulation, because we have the checks and balances in place, banks, institutions, hedge funds, they are happy to play within that market because they have the security and the checks and balances that they know, and they know how to operate within that.
And Bradley, you get the final word here.
Well, I just, we are, at ECC Group, are regulated by BaFin in Germany. We're a German issuer. And we're very pleased that BaFin has actually, come out as one of the most progressive regulators in the European Union. I think for if there is any regulation that needs to come to pass, I think the important thing that we haven't seen, and a little bit further to Shaun's point, is one, having a dialogue with the industry who actually know the business that they're involved in better than anybody else. And then, also think about unintended consequences. We've seen this over the again and again in regulated markets, that you end up with a regulation, let's say, to protect the investor, and it ends up doing the opposite. In the long run, it ends up making the markets more fragmented or more difficult to trade, allow fewer new participants, greater barriers to entry, et cetera, and concentrate the, stifle innovation. And I think looking a little bit further down the road is what I would like to see.
Well, that was a whirlwind. We need another half an hour. I didn't even get to ask you about your Bitcoin price calls for the year, but we'll leave that for another time. Hopefully we can do it next year. Round of applause for our wonderful panel.